real gold. It's precious metals, and amid this economic turbulence that we're in, these prices have been going high. In particular, gold. It's been skyrocketing. It's up more than 50%.
Wow.
We got an expert on all things gold joining us now. He is a professor at Duke University's Fuqua School of Business. His name is Campbell Harvey. Campbell, welcome to the afternoon shift. How are you?
I'm doing well. Thank you for inviting me.
Thanks for coming. Why is gold prices, why are they so high right now, Campbell?
I have a recent paper exactly on this topic. So let me go through some of the reasons. So gold supply is pretty limited. So if you think about the new gold that's produced, it's actually a small amount. So the inflation in gold is about 2% per year. So that means that even if the price is going up by 50%, the supply is relatively fixed. So last year's production is not that much different than the year before. So small shifts in demand have a big impact on price. So where are the demand shifts coming from? So I think the number one reason is this move to de-dollarization, that the confidence in the US around the world and the confidence in the US dollar as a reserve currency has waned. And that has led to countries diversifying their reserves. So it used to be just US dollars in the form of treasury bonds and things like that. But some are adding gold. And some are adding gold very aggressively. And these are the countries that have the most to gain from de-dollarization, in particular Russia and China. They don't want to be reliant upon the US dollar. So the buying by the central banks is one factor that is important, but there's others. For example, China recently allowed its insurance companies to hold 1% of their reserves in gold. And if you add up the amount of gold that would be, it's like 2/3 of their annual mining production. So this is consequential, not just for China, but other insurance companies could actually follow. And then there's something else that hasn't happened yet, but insiders understand that this is a real possibility. And this is the world banking regulations. It's called Basel III. And that sets regulations for the amount of liquid assets that banks need to hold to cover a crisis. So a lot of withdrawals. So currently, things like US Treasury bonds are what they consider high quality liquid assets, but gold is not on the list. And it doesn't make any sense that it's not on the list. Because if you think about it, the central banks themselves hold gold. Like 70% of Germany's reserves are in gold. The US has an enormous amount of gold. So the central banks hold gold, but for some weird reason, the commercial banks can't. And I think that will change. And if it does change, and we make an assumption of, let's say, 5% holding of gold, that would be an enormous demand shock. That would be a demand shock much larger than what happened with the introduction of the exchange-traded funds for gold. So there's plenty of reasons, both in actual demand and anticipated demand, that the gold price has gone up very substantially.
So I'm curious, you just named off a bunch of different factors. Is the government shutdown one of those factors that's kind of bumping up those prices as well?
So this is another thing, that gold is perceived as a safe haven asset. So given our economic situation, which is complex, so economic growth looks okay, unemployment looks okay, but you've got a government with a $1.9 trillion structural deficit. And what that means, a structural deficit, is that if you ignore all of the interest that's paid on debt, um, and you still have a deficit, that's called structural. And we've got $37 trillion in debt, and the number's growing. So having a $1.9 trillion deficit might be understandable if if we're in a war or a major crisis, but no, we're not. Stock market is at record highs. So I think that people are becoming wary of holding uh, all of their so-called safe assets in things like treasury bonds. So traditionally, the 10-year treasury bond has been the bellwether safe asset to hold. But given our situation, and just to be clear, the interest that we pay on the debt is the second largest spending category for the federal government right now. So it's much more than we spend on defense. And when you get into a situation like that, people think, well, maybe I should diversify my so-called safe assets. And gold is at the top of the list. So you're correct that there are many different causes. We've now hit like four different causes for the price to be high.
Professor Harvey, listen, you're talking about diversifying your portfolio there. You know, there's a lot of commercials that are on daytime television, probably while during the afternoon shift is airing, of people, you got to buy gold, and these really kind of cater towards it skews towards a more of an older audience. Do you think people like Max and I, in our early 30s, is gold something that we should be looking at, rather than just maybe investing in a 401k or the S&P 500 or various stocks that are on the market?
So it's important to have a diversified portfolio. So gold is not like a small asset. So the value of all the gold above ground is about $30 trillion. And it is remarkable to me that most investors actually don't hold gold as an investment. And it's fairly easy to do. So in 2004, exchange traded fund was introduced so that you could buy an ETF and they would store the gold for you. In my opinion, it is problematic to go to a retailer and buy a gold bar for multiple reasons. The security of the bar, so you need to put it in a vault or get a safety deposit box or something like that. And also, the physical gold is awkward to sell. So it's easy to buy, for example, at Costco, but it's not so easy to sell. So that's why people go to an exchange traded fund. So I always recommend a diversified portfolio. So that would include stocks, it would include some bonds, and it should definitely include some commodities. And gold is an easy one to actually hold. And gold has got a very long track record. So it's been around for millennia. So it's not something that's new. It's something that has proved its value over the centuries.
Last question for you. We appreciate your time. I'm curious, what are like some of the consequences of the prices of gold rising? I mean, economically and maybe otherwise, because I would imagine increased demand means increased mining, possibly.
Well, that's the thing. It's just very slow to kind of open up a new mine. So given the price is really high, there are mining companies looking at mines that were shuttered years ago and perhaps reopening them because the mine was maybe only profitable at $2,000 an ounce or $3,000 an ounce, but when you're 4,000, there's lots of profit. So older mines could be reopened, but this is not a fast process. So it could take quite a while. And again, I've studied the world mining production, and it is very, very slow to respond to prices.